Hey, good afternoon, everyone. How's it going? It's good to see you guys. See Fazio, Omar, Illinois grain farmer, Bernadette. Great to see you all. It's a pretty interesting day today. Unfortunately, in the morning, I had to run away from my office and then go take care of something really fast. And that was the time where we had a little bit of a freak out in the market. Came down and it actually bounced off of the EMA 8 today. You can see that low touching that EMA 8. And so that low right here was right there. So the right off the bat, within the first half hour, the market came, hit that EMA 8, and then bounced. And that gave me a head fake because I was running around or I had to run out right at that moment. But the market ended up bouncing right there and then chopping sideways. And then we got some news that the Philippines had probably signed a tariff deal. Oh, we don't know for sure, but because it's been unconfirmed by the Philippines. But supposedly we have a deal with the Philippines, and that sent the market back up. And as you can see, though, that last minute dip right there, it brought us back to basically flat on the day. So if we look on a day basis, we closed up 0.01% versus yesterday. And then we opened at 629.10, closed at 628.86. So basically another very flat day. We're starting to see these large wicks, large shadows on our candles, and the market overall slowly, barely just creeping upwards. What's really interesting is the mix of where money went today and where it left. You can see it basically SPY did nothing. Net from yesterday close to today close, basically it ended up nowhere. So went down some, went up some, but ended up in the exact same place. But when we look at the sectors, you'll see that money did actually shuffle around, and that's a little interesting to see. So let's take a look at that. Well, let's take a look at our volatility regime. And we'll see that VIX is actually down a little bit from yesterday. So even though we are 100% flat on the SPY, the VIX did come down. We did go up a little, and it only went up to 17.5 though. So that's a stark contrast to this day over here last Wednesday, where we went very close to 20 at 19.5. And so this market isn't really freaked out. It's not really looking to go down at this particular moment in time, but I would be cautious because this is kind of low, and it's been low for a long time. If we look at the SPY, the other day, I think it was yesterday, we were looking at the ATR. We saw that ATR came all the way down to its current level at 4.67. You can see it's that's a very, very low level. So not necessarily that it's just going to spike upwards, but it is normal for it to go a little bit further up, if only to over here, 11. That would be normal. Let me see if I can draw a line so you guys can see it better. You see that 11 over here, right there, over here. It visits 11 a lot. We can stay low for very extended periods of time, but that's during massive bull markets. Are we in a massive bull market? Well, from April to now we were, which is why ATR came way down to where we are right now. But it would be kind of normal for it to float back upwards to between 8 and 11. That would be normal. So again, there's a lot of signs that we should have some sort of pullback. We might just get a really long period of consolidation, and then we have room to move higher. But right now, if we take the market as it is moving higher. It is moving in this upward trend, and very, very mildly closing out higher. We are making a series of higher highs. If I took this and I took let me try this different chart. This one. Let's go here. Get rid of those. And we take the SPY, okay, that's a 52-week high, but a 52-week high in this case is also the all-time high. And you can see that ever since June 26th, we have been creeping up and making a series of higher highs. So this is very mildly uptrending, and the market is bullish. It still wants to go higher. It's making it difficult to find opportunities because we are in that pullback regime and we're not getting a pullback. So it makes it very tough. So what do we do in cases like this? Then your best bet is to go super short term. So you can do things like bounces off the EMA 8. So this day, July 16th, was an opportunity for a very short term swing upwards. Today, bouncing off the EMA 8 is another opportunity for a very short term swing upwards. If I'm looking for a very short term baby bounce, baby pullback, and then bounce upwards, then I've got to, number one, make sure I don't get taken out by randomness. So I've got to watch my ATRs very carefully, but also I want to take my profits fairly quickly because this isn't a super strong trend. I'm not going to count on my money, or my investment going way higher. So I'm not going to count on the SPY, kind of like what we were talking about yesterday. We're not going to count on that going up to 640, 650, 660. We might float our way up to 630 and then maybe float our way up to 635. But we were just just set our targets at these lower areas because of the volatility regime that we're in, and the fact that we're only floating up, we're not moving up very quickly. Or we could do what we said yesterday, is look for the areas in the market where we are getting at least some volatility. So we'll explore all of that in just a bit. Let's see who else we've got here. We've got Spider Monkey, we've got Steve, Vladimir, Nestor, and David. Loving the post-market show. Oh, thank you. Thank you very much, David. I'm glad you're finding it educational. So we took a look at the volatility regime. Now I want to see where money has moved in which sectors, but I really want to know if it's going to be sustainable, if it's going to continue to move in that direction. I've started building out a tool. It's not, I'm continually finding issues with it. The latest one is I thought I had programmed it to do a whole bunch of sectors, and it turns out it's only doing a subset of those sectors. But I can give you a quick peek because even though it's not showing me all the sectors, it is showing me sectors where things are moving. So I can still take a look at that way, but let's look at it our normal way first, and then we'll take a look at the new way. Hi, Kirk. So today we've got home builders, retail, healthcare, real estate. So we got risk and not risk, but specifically home builders, retail, and then healthcare out of nowhere, and then materials, utilities, discretionary. So we've got a really, really mixed bag out of the traditional sectors. And then we've got SPY way down here. So anything above SPY outperformed it, anything below SPY underperformed it. And what we see here is that tech, QQQ, and MAGs all underperformed the S&P 500 today. So did defense actually, and SMH. So basically all the tech stuff, all the large cap, and all the defense is underperforming the SPY. That means everything else was dragging it up. So even though the MAGs are down, everything else moved up enough to keep the SPY perfectly flat. That's kind of interesting to note. So money kind of leaving these risk sectors, although we are going into certain risk sectors like retail and consumer discretionary. So basically, really, money is leaving tech and going into just about every single other sector. So what we want to see is by how much. Home builders got a lot, retail got a lot, biotech and healthcare got a lot. So we might want to explore that, but let's take a look at least partially developed tool so far. So one way that we can take a look at potential opportunities is to go over multiple timeframes. And so these are just 20 sectors, not even the 10 major sectors I found out or getting compared. So unfortunately, these are out of the 20 that are being compared. These are the top 5 in these different timeframes. I have 1 day, 1 week, 1 month, 2 month, 3 month, and 6 month. So a nice kind of spread over the near term of performing sectors. And what I want to see is if I see any commonalities across these timeframes, because if I do, then I know that money is being deployed and it is continuously being deployed over the last 6 months. And those are areas of interest by Wall Street. So 6 months covers the entire of 2024 or 5 so far. Actually, not the entire, but it doesn't go beyond 2025 is what I'm trying to say. It doesn't go into 2024. So all of that activity has been specifically this year, and specifically since we got our new president. So we want to pay attention to what is moving. And what we see today, what I'm seeing is electric vehicles. That's kind of interesting. Clean energy, and the reason why I say it's interesting because it's also over here on the 1 week. Clean energy and electric vehicles show up on both of those. Electric vehicles shows up on the 1 month, and so does clean energy. And then on the 2 month, electric vehicles, but not clean energy. Here on the 3 month, electric vehicles. And then on the 6 month, clean energy, electric vehicles. So that might be a little unexpected. I know it was unexpected when I saw it because I thought Trump is all big oil, big energy, or drilling more, finding, exploring like nuclear type of stuff. But for whatever reason, since the beginning of the year, pretty much, or at least since he's been in office, we have seen money really move into electric vehicles and clean energy. Now I'm going to have to break those down and see how well represented the actual sector or the name is for what is actually being held. Because what we could find is that, electric vehicles, and there's one like super performer that is actually dragging up the entire ETF. And maybe that one super performer isn't even a manufacturer of electric vehicles. So we'll have to dig into that a little bit. But what's really interesting is that electric vehicles was on every single one of these, and clean energy was on almost every single one of these. And let's see if we can see on a larger term, crypto. So not today or in the past week, but crypto has been a focus as well. Airlines and aerospace defense seems to be a focus as well. So that's all good knowledge, because what that tells me is if I find something that is trending in one of those sectors, it is probably going to continue to trend, especially if it's over here. It's on the 1 day and the 1 week as well, and it's held up over the slightly longer time frames. So I'm going to be super interested in looking at these clean energies and the electric vehicles. Crypto, we've already been talking about, been looking at, and same with defense. And then the airlines, we haven't, but we could look at that. It just depends on how much time we have. All right. Barry says, truly enjoy the post-market trade. Oh, thank you. Great education gives insight to many aspects of the market. I wish I had held strong in today's payout trade. Yes. Yeah, me too. I got head faked because of everything else that I had going on. So I apologize for that. We'll have another day tomorrow. This market isn't really going anywhere, right? So So a strategy, income strategy based on not a lot of movement is perfect in this environment. So I'll keep that in mind. I just need to keep my eye on the wider picture so we don't get head faked again. Yeah. So over here, clean energy and electric vehicles, that's what I really want to look at today. So let's take a look at what's going on in those sectors, or at least those ETFs. Not stock fetcher, bar chart. So let's take a look at ICLN. ICLN. Running late, but pasta sauces. I don't know, it sounds like you got dinner coming up soon. Sounds good to me. I'm a little hungry. Clean energy, we got First Solar, Next Tracker, Enphase, Aura, Bloom Energy, Run. Let me add some of these. Here, let me do it this way. I'll do it off screen so I can still look at these with you guys. So we got First Solar, Next Tracker, Enphase, Aura, Bloom Energy, CUN, Run, VER, Solar Edge, Plug. I think that's enough. And then for electric vehicles, cars, we've got MP. Okay, see, this is what I was talking about. They have MP as the top holding in their EV ETF. So MP is not a manufacturer of electric vehicles. It is the one that the Department of Defense just invested into that produces rare earth minerals, which is kind of related, but it is an input into electric vehicles. It's not electric vehicles. So that's what I was saying. You might have like one stellar stock that is just dragging the entire sector up or the entire ETF up. So what we'll probably see is that MP is massively outperforming Tesla, Rivian, Lucid, the actual car manufacturers. And then maybe MP for sure was doing very well. Maybe Albemarle, another minerals producer, is doing very well. That's interesting. Their ETF invests in another ETF. Okay. And then I don't really know a lot of these others. Yeah, and another ETF, an ETF holding at least two other ETFs. That's interesting. Okay, so MP, let's get MP, Tesla, Rivian, Lucid. I don't know if I want to put in those other ETFs. Albemarle. Plug was already in the solar or the clean energy one. ANTM. There's a lot of ETFs in this one. Yeah, so that's all I'm going to put. That's all there is, actually. Everything else is ETFs and currencies. All right, not a greatly diversified or at least not a wide spectrum. But I guess there's not a lot of publicly held companies that produce electric vehicles, so they might be very limited in what they can do. All right, so let's bring this back and let's take a look at some of those. Okay, Enphase had earnings today. Okay, do you follow level 2 and time and sales to make trades? What do you think about this? There's so much information out there, but the art of finding good leads to make trades. My answer is no. I know people do. Some people do it successfully. Most people have a hard time, but that is true with everything in trading as well. So the thing with options, time, and sales is you don't know why they're buying or selling at a particular moment in time. And you are making an assumption that if they're buying, then it's because they're bullish, or they're selling, it's because they're bearish, even if it's a really large order. So you're making a root assumption, and there are techniques and ways of analyzing to make that assumption a little bit more certain. But again, nothing in the market is 100% certain. So just because you see a volume of unusual options activity, or you see level 2 orders, level 3, or even level 4 orders coming in, and you're trying to use that as extra information, the market participants, the large institutions, the market makers, they're very familiar with all of this, and they play games, right? Like they put phantom orders. For example, if I'm on MP and I'm a large institution, maybe I have I put in a 20 million order at 80 over here, and everyone gets excited. They're like, oh my God, well, if we get up to 80, then there's a big buyer. We're probably going to go to 100 because that big buyer thinks there's something. But guess what happens when you get to 76, 78, 79? Oh, suddenly that buyer disappears, right? So they just pull their orders. So there's a lot of games that can be played even on a level 4, level 3, level 2. Options times and sales is a little different because those orders are actually executed, whereas at level 2, 3, 4, those are just orders that are placed that can be pulled at any time. So, but again, even with options times and sales, you don't know the reason behind that order. You don't know if it's a hedge. You don't know if it's removing a hedge. You don't know if it's actually building a position. You don't know if it is an offset. Like, for example, I might go in and buy, for example, a bunch of Tesla stock, but I'm not necessarily bullish on Tesla. I might have another reason. I need to balance out my portfolio would be one reason. I need to maybe balance out or hedge a different position by buying a unrelated name. So if I have a small name stock with not a lot of liquidity, I might use the correlation to something that is very liquid like Tesla in order to hedge away some of my risk or to bolster some of my returns on that small name. So there's a lot of things, a lot of games that can get played. So I don't use option times and sales. I don't do that because what I find is it's too myopic for me. Some people can do it. If I'm not trading on a 1, 2, 3, 4, 5 minute, 10 minute, 20 minute, 30 minute time frame. I'm in positions for several days and weeks sometimes, not too many weeks, but my preferred time frame is anywhere from 1 day. Usually I like 2 or 3 days, but I will get out after 1 day if I realize really good profits. But my hold time is a few days to 2 to 4 weeks normally. And in those time frames, getting that level of detail is not necessary. I give up myself more headaches than problems that it solves, because I have to stare at that data minute by minute, second by second. And if I'm putting that much focus on it, then I'm missing a lot of the bigger picture. So if I'm going to put that much focus on it, then I want to be a day trader for sure, but most likely a scalper if I'm scrounging for option times and sales in level 2, 3, 4 data. Because as a day trader, I don't even need to use that stuff. I can use all the patterns and flows, the VWAP, things like this, where that doesn't require me to just like stare at a market stream. And I can just watch the price action. But if you want to be a scalper, then yeah, those tools can be helpful. Okay. Today, I needed you to send us your SPY gamma. I don't know, Omar, because I had to run off in the morning. And so that's why I didn't send out any gamma levels today. I was away from my desk for about an hour, and so I didn't send that out. So that's why you didn't get that. Okay, so MP jumped up, gapped up twice on market news that the DoD was investing in MP. and then we kind of flattened out. There's still a lot of volatility here, so it could still move, but for now it's flattening out. It does need to come to let me reword that. It's probably going to consolidate or pull back to the EMA 8 or EMA 20 before it moves again. And it may not move again, but the most likely path that we can see from what it's doing right now is that it'll consolidate or pull back before it moves again. Tesla not performing nearly as much. Rivian also not as much, but you know what I should be doing? I should be looking at 6 months, because we saw cars outperform on every single time frame up to 6 months. So let's go back to MP. Well, okay, so clearly this is why on a 6 month time frame, on a 3 month time frame, a 2 month time frame, a 1 month time frame. Yeah. So yes, MP has been outperforming. Tesla, definitely not on a 6, maybe on a 3, but not really on any of the other time frames. Rivian not looking great. Albemarle, okay, from 3 month. So Albemarle I might take a closer look at it. Lucid, maybe. Plug, maybe. First Solar, just really messy action. Very messy action in this sector. Enphase is just maybe barely becoming okay. Or okay, ORA. What do these guys do? That one looks good. Okay. Vertically integrated company primarily engaged in geothermal and recovered energy generation. That's interesting. Okay, so clean energy, but not solar, not nuclear, mostly geothermal. Very cool. Okay. Well, their stock is doing excellent. So Aura is by far the best looking one I've seen so far. Blooming Energy, not bad. There's some really weird volatility in action right here. CWEN also looking very good. Let me start noting some of these and we can take a closer look at them. And BE, Sunrun, SolarEdge, not bad. Really massive pullbacks, but overall not bad. You'd have to have an iron stomach for this, honestly. And Jinko Solar, that's okay. JKS. Okay, so we'll take a look at those more carefully. What did I start? Well, see what, just super wiki. Yeah, I personally, and if it's that wiki, I doubt it has good options. Yeah, a little wide. Plus it has 2.5 strike increments on a $30 stock. That's not great. We definitely want a $1 strike difference on something like that. So let's take a look at, we'll save the best looking one for last. So we'll go to BE, again, gappy wiki. That's what I saw on most of these, like clean energy and car stocks is just unfortunate. At least they have they have 50-cent increments on their closest expiration, or their closest monthly expiration. Nice and tight. Okay, so this maybe, I would consider it, but knowing that there's these huge wicks and candle or shadows on the candles, and just being okay. You really have to be okay with a lot of volatility if you're going to go into BE. SolarEdge, similar. This would definitely need a pullback though. JKS. Looking like a potential breakout. Let's take a look. What was my ICLN? There's some volatility here for sure. So we'd be okay with a breakout, but we would wait. What was it? JKS? Yeah. We would wait till it cleanly broke out because this is still sitting at that breakout level. Okay. So last one, ORA. This is by far the least wicky and cleanest moving out of all of them. It's still pretty volatile and gets these massive surges upwards on not even like no news, no earnings. And so every once in a while it gets these massive surges. So if we went in, or if you went in, or I went in, the way I would, if I saw one of these massive spikes up, I'd be out. So if I went in tomorrow and it just surged upwards, I'd definitely be out. Or even after a few days like this. So this one right here, 1, 2, 3, 4, if you, for whatever reason, you got in on this day and then you saw this, I would probably try to be getting out at that high. But in this case, if I didn't, then, and why would I know to get out at that high is because of this consolidation level right here. Okay, so I might have even gotten out on this high over here. But if not, I had my second chance. And if not, I had a gap up beyond a third chance. So that on this day, if this happened and it gapped up above this support level, then I definitely try to ride it out as long as I could and try to day trade my exit. So let's take a look what that might look like. July 25th on Aura. Did it? Oh, I got the date wrong. It's not July 25th. It can't be. July 14th. Okay. July 14th. I lost you guys. So I don't know where the chat is anymore. Okay. July 14th. And where? 14th is this day. So, is that the right day? July 3rd. Well, okay. July 3rd. And I need to kind of close my eyes and then replay. Okay, so if we gap up, now I want to day trade this. I'm trying to see if I can get, I don't have to get the exact top, I'm just something reasonable. Like either this is going to come down and start filling the gap, in which case I'm going to take my profits and run, or I see it hitting a certain level and I might even want to draw certain levels ahead of time. And just see what happens. Okay, I'd be out right there. That would be it. That was it right there. Okay, so shot up, and then we see this red bar. You know, then that's where I'd be out. So let me move that, and that's how you day trade it. Okay, that's parabolic, sudden parabolic movement, and the rejection, and it was a rejection off of Sorry, it went through a line that we identified. And so on that little pullback, that's where we get out. Okay. I don't know how the rest of the day went. It's just July 3rd. Okay, so actually it did go higher. It went higher, pulled back down, went higher again, but it basically closed at that level. Okay. You would have realized your profits early in the day though and moved on. Okay. So just a little demo of how you would shift into day trading. And then if you wanted to go into the minutia detail of time and sales and all of that and see if other people are exiting, or if you had level 4 data, you could visualize where there's large orders or sell pressure, potentially if there were actually orders out there, then you could use that to your advantage as well. Okay, let's see what you guys are asking me. Please click on the thumb. Oh yeah, please click on thumbs up. Thank you, Naples fan. Why is TSM falling after earnings? I like the company for long term because it's NVIDIA's main chip supplier. So Omar, we want to avoid the trap of why. So in some cases, why really matters, but in most cases, why doesn't matter at all, especially when it comes to trading. Okay, all we care is that maybe something is moving. Okay, so you said that TSM is falling after earnings. Okay, so basically this was earnings. We had an earnings gap up, and then now it's falling back down. So people are taking profits, and it's pulling back and selling back. Okay, so there doesn't have to be any other reason in the market other than that there's more selling pressure than there's buying pressure. That's all that drives markets in the short term. And the long term, what drives markets is corporate earnings. Okay, but markets are very emotional. They're like everyone's like triggers and everyone's like money issues all wrapped into a single place. So the real reason that anyone can make up any sort of good sounding reason, but the only real reason is that there's more selling pressure than there is buying pressure. So whatever feel good reason that someone else might come up with, it's not really valid. So a few weeks ago, I made a comment where, I guess it wasn't in the post market, it was probably, I think it was on a profit panel. I said that most people are not okay with unknowns, and their brain will try to come up with an answer and find an explanation for something that isn't known. And that's how conspiracy theories get developed. We see a phenomenon, we can't explain it, and so we go and find an answer or find a reason that satisfies our lack of knowledge, and we say, okay, that must be the reason. Because it sounds good, it's kind of logical, kind of makes sense, but when we do that, oftentimes we have a lot of gaps in our information and we come up with the wrong conclusion. So an example of that is I hear people all the time, the market maker is going to push the market up. The market maker is going to flush out all the people who have bought calls. They're going to shove it down below that strike. And no, that never happens because they can't. They just can't, especially if you're talking about something like SPY. Number one, they don't have the money to do it. Number two, it goes way outside their mandate, way outside their business model. And number three, they would completely ruin them because their risk would go way crazy, and just one bad event would just send them into bankruptcy. And then people go, well, why then? Well, it's just they were selling for whatever reason they were selling. Well, we can explain why they were selling pressure or buying pressure, but the real reason is that they're selling pressure or buying pressure. And the market maker is hedging themselves so they don't actually lose money when a whole bunch of people win on their calls, okay, or they lose very little money. So we don't want to come up with conspiracy theories or weird explanations or feel-good explanations as to why. What we want to do is get comfortable with unknowns and saying, I don't know why this is doing this, but you know what? Where's the opportunity? Maybe I'm super happy that's doing this because I love TSM. And when earnings it gapped up like this, there was no way for me to enter. But guess what I see and what I notice? Okay, if I don't try to explain why, my mind is clear to look for opportunities. If I'm searching for why, then what I'm underlying underneath that, my hope is that if I understood why, then I can predict the next time it's going to happen. But we're never going to be able to do that because conditions are never going to be the exact same. What I can do is look for the opportunity. I see a very, very strong long-term trend on the 50, the 100 or 90, the 200. Look how straight these are. You almost never see really straight long-term trends in parallel with each other. That is super strong, okay? So what's the price doing? Price is very clearly exhibiting a very interesting pattern here. That if it continues, so my thesis, my trade thesis would be this pattern is going to continue because the market hasn't told me otherwise. Right? So my thesis would be that this would continue. So I'd be very interested if I was using price as my short-term trend in a green confirmation bar that closes near its high and is above the high of yesterday, which is going to be super easy to do. So basically I'm looking for a green bar that closes near its high. And that would be super early entry for me because that would be using price as my shorter term trend. If I don't want to use price for my shorter term trend, I'm going to watch this EMA 8 very carefully and wait for it to do what? Revert. And to revert to the same direction as the longer trend. So basically, I'm going to be waiting for a few days, maybe a little longer, for these green bars to happen and for that EMA 8 to start curling up. That would be the next earliest entry. And then my third or my last opportunity for entry, at least this time around, would be when that EMA 20 curls up and does the same thing. Okay, so what's also really interesting though is in this particular case in Taiwan Semiconductor, because why my mind is clear, I don't care why this happens. I don't care why. All I care is that it's happening and that it's a pattern and I can take advantage of. Okay. This other pattern that I'm seeing is these massive gap ups. Gap up, trade, gap up, trade, gap up, trend. Not quite a gap up, but very strong surge upwards, move, gap up, okay? So what happened every time we touched the MA50? Within a couple days, we gapped up, gap up, gap up. So I'd be very tempted to actually put in a starter position right here, now that we've touched that MA50, because it just might gap up, okay? I don't care why it gaps up. I don't care why it gaps up at the MA50. All I care is that 4 out of the last 4 times, that's what it did. And maybe it'll happen again, okay? So why is the wrong answer, a wrong question? The right question is, how do I take advantage of the opportunity that's in front of my face? And if I don't see an opportunity, then the question is, where is the opportunity that should be staring at me in my face? And if there is none, then you'd be like, okay, which ticker has an opportunity that is just staring me in the face? Because if I still can't find it, then I'm looking at the wrong ticker, okay? Which was what we started out doing. We were looking for places where there's very likely an opportunity that's just staring us in the face that we could easily take advantage of, the low-hanging fruit. And then, so when you asked about Taiwan Semiconductor, it's like, oh, where's the low-hanging fruit? Ah, bam, right there. Bounce off of MA50. Why? Look at it, always bounce, well, not always, but look at the last several times it bounced off the MA50. Okay? It always went higher. I have to prepare for this jagged, sharp drop down afterwards also. But the day, within a few days after it touches that MA50, gap up, gap up, gap up. Maybe I just play that gap up. And I don't care that it runs higher afterwards. Right? So that is another opportunity. So either I play the very short-term gap up, or I try to play this longer term and risk these sawtooth drops back down to the trend line. Okay. All right. Do you think it's a good time to invest in quantum computing companies? 7 days till the end of the month, institutions are pocketing profits, potentially. Okay, so that's what I mean, Naples fan, is like, we don't know. And we try to fill in with a good sounding answer that makes us feel good. And then I guess then you can move on. But what if you could move on without filling in that explanation? Okay, so we don't know for sure that institutions are taking profits. And we could try to chase that down. But really, if I was an institution, I wouldn't be taking profits right here. This looks like a massive buy campaign, right? Institutional buy, potentially another institutional buy. There's no reason for an institution to take profits right now. No, not a real institution, not the really big guys who buy and hold for many years. Okay, if I was a short-term, super short-term fund, which there are not that many of, we don't care about 3 months of profits. If we're a giant institution, I care about 1, 2, 3, 4, 10 years. I'm also worried about my taxes. All right, so I'm not going to take profits right here. If this looks like this is going to keep on going all year long, there's no way I would take profits right here. I would just keep on buying and buying and buying. Okay. So like I said, we don't want to fill our heads with random explanations that may or may not be true. How can I pounce on it like a ninja? Yes. Okay. Do I think it's a good idea to invest in quantum computing? We went over that the last couple of days. It looked pretty good. I should put it into my sector analysis. Quantum computing ETF. I might already. I know not specifically quantum, but let me see. Where's my... I've got software. So in any case, QTUM. Yeah, we did this. We did this. Was it yesterday? If not yesterday, it's pretty recent. QTUM. Yeah, it was sort of similar, right, to TSM. You've got the not nearly as strong uptrends, but that MA50 is definitely strong. Potential bounce off of it. And for this one, personally, I would want a little bit more confirmation because I don't have the gap up runs, bounces off the MA50 like I did in Taiwan Semiconductor. I would wait for a couple green bars and then that EMA 8 to curl back upwards. For the overall sector, we looked at individuals also. It's probably even on our watch list here. Or maybe I did it last week and not yesterday. In any case, yeah, quantum is looking pretty good, except I will wait for the bounce. Okay. All right, so that used up most of our time today, but it was a great question. I'm glad you brought it up because it led to a great lesson. Hopefully you guys learned something about, if nothing, it's about the attitude of a Wall Street trader. a professional trader. As we don't waste our time and energy on why. We focus in on the opportunity, because if I ask why, it's going to slow me down. If I have to explain everything, it's going to slow me down. And another Wall Street guy, another wolf is going to come in and eat up my opportunity. Okay, so if I sit here and go, why did this gap up? Okay, then another guy is pouncing on that and then driving the price all the way up to here. And so by the time I have an opportunity to act, then it's not a good entry anymore. Okay. All right. You missed the bounce of DHI. Yeah, you're welcome, John. Oh, there you go. DHI, well, that was an earnings surge. Okay, so that was high risk right there. But after that, what's really interesting is that it's continuing to run. So this is getting, at some point, it'll flatten out. When it runs like this, they tend not to just pull straight back. It'll at some point it'll taper off and then go flat, and then we'll have to see from there. But DHI, what do they do? Are they staples? Construction and homes. Yeah. Okay. So home builders and real estate did really well today. Construction did very well today. This would be real estate sector. Okay. Yes, about the why. This unburdens my head. Good. Good, Bernadette. That's excellent. That's excellent. Yeah. Very helpful, learning a ton. Thank you. Yeah, you're very welcome, Maria. Okay, so we're going to end it there, and hopefully, it's a habit, right? I know people will continue to ask why. It's going to take a while to break that habit, because your mind automatically goes to try to fill in that gap. So I know it frustrates my wife, because a lot of times I just don't care why. She's trying to tell me something. I was like, it doesn't matter. Let's just fix the issue. And so in real life, you got to listen to the whys sometimes, but in the markets, for the most part, they really don't matter. Okay. All right, guys, thanks so much. We'll end it here today. I'll see you guys tomorrow. Hopefully we'll have a nice, well, so most likely we're going to have more of the same thing, chopping. What happened here? What is there? This does not look right. No, in any case, I'll figure it out. Okay. All right, thanks, guys. I'll see you tomorrow. All right, have a great night.